Diane, you have a wonderful view from Chicago, and I would suggest it is a different and original view. Can we sustain the economic growth that gets us to these many rate increases?
I think the Fed is in a position now where they're chasing rates up at the board. The Fed presidents, which are more at the regional level, and I talk to a lot of the Fed presidents as well, the Fed presidents are hearing what I'm hearing, and there's a very mixed story out there where now tariffs, particularly in the manufacturing sector, the auto sector, and in more broadly the manufacturing sector. I was in Dallas where I dealt with some clients, and they were very concerned as well. And they're starting to see a hesitation in investment in their orders for 2019. Things are great right now. They're booming. The Fed's reacting to that. But there is some undercurrent that's starting to build from the uncertainty of trade. And as we know, cautionary from Brexit, it was a vote, not an action, but it took 2 years for the uncertainty to show up as an investment collapse in the economy.
But I was going to say, Diane, to that point, it's interesting when we look at the dot plot, there's no sign that the Fed plans to pause.
Yes.
They are on this march,
Scott.
and they're going to keep raising rates. And, I think that's kind of setting us up for that, exogenous event where all of a sudden out of the blue, there's some piece of news that causes them to have to stop.
What kind of exogenous shock are you referring to, or could we get?
Well, I mean, certainly, the emerging markets have been on the radar screen. Things are starting to look better with the weaker dollar. But, I think that all of a sudden the world might wake up and realize that all the tariff threats are starting to affect the real economy.